This is a sample of a company financial analysis final project presentation for business class Principles of Financial Management. So I'm going to start this. So I'm talking about Apple. So Steve Jobs founded Apple, as a co-founder of Apple in 1976. I'm just going to highlight a few things that happened up until the point Steve Jobs passes away. So in 1984, they launched the personal computer. Then a year later, Steve Jobs leaves and doesn't return until 1997. After he returns in 1997, there's the release of the Mac, the iPod, iTunes, an iPhone, and an iPad. And then in 2011, he passes away. Now Tim Cook is the CEO, and the question everyone asked was, will Apple stock be okay? Will Apple survive Steve Jobs passing away? As we know, Apple is still around and going strong, right? So this is an example of some of the products that Apple sells, an iPad, a Mac, an iPhone. There's a watch, there's plenty of others. But where the real money is at is selling your data. So let's talk about Apple's financial statements. So remember, this is in millions, so add 6 zeros to this. So in 2019, Apple's total revenue is $260 billion. And that's down slightly from 265 in 2018. The total cost of revenue is also down, and the selling and admin expenses are up. And so we have R&D is up as well, which would be expected for a technology company continuing to invest in research and development. And then we have total operating expenses is up slightly from 2018 to 2019. Apple has a year-end close in September, so this is through September 30th, 2019. So the total operating income was $63 billion in 2019, down from $70 billion. But as you can see, it was 60 billion, 61, 70, almost 71, and 60, almost $64 billion. So let's talk about their balance sheet. So some key highlights. What does Apple have? Apple is holding a total of $100 billion in cash and short-term investments. It's a significant amount of cash. And Apple has other receivables. And then Apple's holding $4 billion in inventory. It's up slightly from last year, down from 2017, but more than double in inventory from 2016. Apple also has plant, property, and equipment, down slightly from last year. And then long-term investments. So they turn some of these long-term investments into shorter-term investments. And so Apple has total assets of $338 billion. So let's look at their liabilities. So accounts payable is down from 2018. There are no accrued expenses. Notes payable and short-term debt is half of what it was in 2018. Current portion of long-term debt is up slightly. And then other current liabilities is up. So the total liabilities overall is down from 2018 to $105 billion. Then you have long-term debt, which is down, and total long-term debt. So $248 billion is the amount. So common stock. So Apple's common stock is here. They have an unrealized gain. Other equity. So Apple also has a total outstanding share. Add 6 more zeros to that. Okay. So let's highlight some things in the cash flow. Apple produced more than 2017 and 16 from net income, but less than 2018. So 55 billion is their net operating after adjustments and things like that. Depreciation is added back because that's a non-cash item. And then we have adjustments to net income, changes in accounts receivable, and other. So the cash flow from operating is $69 billion, down from 77, but still higher than 16 and 17. They have capital expenditures, so that's money they spent investing on capital expenditures, but this was money brought in from investments, right, from selling investments. So they have $45 billion from investing activities, so that's a positive to cash flow. They did pay out dividends, they repurchased stock, and they paid down debt, so therefore they had $90 billion flow out for a total change in cash, a positive $24 billion added to cash this year. So let's head into the ratio analysis. So the return on equity for Apple is significantly higher than the industry standard. They're in the technology sector. So the return on equity is 55 compared to 31%. Return on assets is similar, 15.69 to 15.07 for the, and then return on investment is 22.9 compared to the industry standard. So they're at or above the industry standard for management effectiveness. Now let's talk about ratios related to liquidity. So Apple's at 1.5 and the industry standard's at 1.68. Current ratio, for the current ratio, which is current assets minus inventory. Now their current ratio, which is just current assets, right, over current liabilities, is 1.54 and the industry standard is 1.77. So Apple's long-term debt to equity is 101.46%, where the industry standard is 46.96%. The total debt to equity is 119% compared to the industry standard of 53%. So one might say, why is Apple's debt to equity so high? But Apple is taking advantage of a cheap bond market. At the end of June, Apple had a cash reserve of $225 billion. So it's likely that they took advantage of low interest rates and used this debt to increase shareholders' returns. With 30-year Treasury lows, Apple is able to borrow money so cheaply, they would pay an interest rate of 2.99% on a new 30-year bond. And so it makes sense that Apple is borrowing to increase shareholder return because it's such a low amount. But they have $100 billion in cash and short-term investments on hand. So while this might be a scary number, it's not as scary due to the amount of cash Apple has. They're just taking advantage of opportunities. Let's talk about their profitability. Their gross margin is below industry standard at 37.82%. But their operating margin, that should be a percentage, their operating margin and their net profit margin are higher than industry standards at 24.57 and then 21.24% versus 17%. Price to earnings ratio. So let's talk about this. We're going to talk about Apple's stock price because there's a difference between doing well financially and whether or not we should buy the stock. And so Apple's stock has risen over 100% in the last year. And some would say, well, what is it overpriced, right? And so the reason that analysts are making the argument that it is not overpriced is when you look at Apple's price to earnings ratio compared to the top competitors in the broad technology spectrum. So Apple has a price to earnings ratio of 26.4. Facebook is 35.39, Microsoft is 31, Amazon is 69, and Alphabet, which is Google, is 31. So all of these competitors are trading at a higher stock price to earnings, right? So this is Apple's stock price, right, as of 2 weeks ago. It's actually now, I think, as of the time I'm making this, 313. So $2.99, it's actually 313. And it has gone, you can see since 2015, the spikes and dips, but a significant rise. So this was below 100 in 2017. So in 2 years, below 100, $2.99. Just remember that Apple has had several stock splits. So analysts' opinion, the current stock price is $2.99. The average analyst targets originally was $2.73. But Apple, so they give a range, 150 to 350. I'm saying hold the stock. A lot of analysts are saying buy the stock. In 2019, the year, the stock was up 86%. It's now up 100%. why would you still want to buy Apple stock? So I'm going to talk about what's happening in the news. So Apple has announced a new iPhone design for the iPhone 12. And analysts see a bull case of seeing Apple at $400 per share because they're going to enter the 5G market. Apple has been trading at 22 times price multiplier. We actually saw 26, right? But the scenario is that Apple has a significant amount of cash, right? And they are moving into a whole bunch of different markets. The iWatch now has the opportunity to do EKG readings. So they're moving in the medical device market somewhat with that watch. But the most valuable thing that Apple has is all that data. Think about while you're wearing the watch and you take heart rates, and they sell that information to insurance companies so that they can predict how likely you are to die, or how often you have heart palpitations, or whether or not you're exercising, and all of your movement and actions and all of these wonderful things. So I think with 5G, the new iPhone design, and the opportunity to sell that data to a lot more people, Apple is bullish, and bullish means we're thinking it could go to $400. So if that's the case, if I bought it at $315, I would still make the difference between $315 and $400 if I sold it at $400. So I'm saying hold fundamentally, but many analysts are saying buy. And then we would take questions. So if you have any questions about this, feel free to post in the forum for me. Thank you so much.